My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A bullish white soldier yesterday and a possible two-day pipe bottom as well. This as the market bounced up off the June 2018 high at 118.51, but also I suspect it was heavily influenced by the combination of the nearby continuation trend line from the old December 2019 to May 2020 lower diamond up trend line, that's currently at 118.29, and the middle time of the large January to May bearish Andrews pitchfork. The market pushed up through the two lesser Fibonacci levels at 118.87 and 118.97, but failed to breach last Friday's high. Overhead we have some fairly free air until the recent 50% Fibonacci line at 119.75 and a flatlining long moving average at 119.98. I would like to point out once again the market did something similar back in late March at a similar distance from the same diamond trend line. So far today, a small test higher, but then a pullback down to rest on top of the lesser Fibonacci levels, well, just about. Though it may be moving towards a bearish dark cloud cover pattern now. We still haven't managed to reach last Friday's high as yet. Cable, aka sterling against the US dollar. A bullish white soldier yesterday in a combined bullish engulfing pattern and bullish double, if only just on the former. Additionally, we also may have with Friday's action a possible two-day pipe and bottom pattern, though it's a little early as yet to know for sure. The pullback up halted well before the broken lower time, currently at 139.99, of the June to September 2020 bullish shift pitchfork. This pitchfork is important, as I've repeatedly mentioned, as up until last week it had shown the bullish angle attack since last September. The actual cap on yesterday's market was the slowly rising medium moving average, currently at 139.43, which did a very good job of it. The base of the action was the May 2020 today uptrend, currently at 137.37, which over the last few sessions has halted the declines upon approach. All this neither supports nor hinders the idea I've recently put forward of a possible very large Adam and Eve type double top formed over this year. More on this later. Now so far today, a pullback lower once again, away from the medium moving average. Euro sterling. A combined bearish harami and bearish double yesterday, acting as a reassertion of the bearish initiative after Friday's just about bullish engulfing pattern. The move lower, obviously, did not break new recent ground, but it does highlight something that is happening. The recent bearish roof stroke half diamond pattern, which I've mentioned often, is morphing. I think it may be morphing into a possible bear channel, currently 85.33 to 86.22. Now this does not negate target X as a possible downside target for the roof stroke half diamond pattern in the 85.25 area. For the moment it actually supplements it. Anyway, the market's move lower was once again halted by the extension of the flat trend line from the March base descending triangle at 85.45. Now so far today, a reactionary pullback up off the 85.45 support, and looking like a possible immediate countering bullish harami right now. US dollar against the Indian rupee. A second, if higher, indecisive spinning top yesterday. The market punched up through the overhead resistance from the 50% Fibonacci line of February to April 2020 move at 74.26, which had recently capped the market, but retreated down to close below it. It is at this point that I wish to remind you, dear viewers and listeners, that I mentioned 3 weeks ago and every subsequent day since that a pullback up from the big fall between April and May could see a move as high as the 74.40 area and still keep the bearish initiative. Please note the 74.40 area is not, repeat, not a target. No, it is a limit on the move higher if and only if the market wishes to still keep the bearish initiative. So it's not like you hadn't been warned in recent days. Well, so far today, a strong try higher, after first establishing a base that was slightly lower than yesterday. Indeed, because of that, we could be on for a key reversal up today if prices close tonight over 74.15. This now threatens the earlier mentioned pullback limit at 74.40. US dollar against the Brazilian real. Counter to the counter bearish harami yesterday after Friday's immediate countering key reversal up and the prior session's combined bearish engulfing pattern and bearish closing black Maribosa. This market is now moving to a phase of indecision, not just on an intraday level but on an interday level, as the market tries to decide if it really wishes to fulfill the two possible scenarios of a larger bearish halfway hesitation and a more recent bear flag, seen here in the past 2 or 3 weeks. Below we still have target X in the 482.80 area. This is the very provisional and very preliminary target of the whole April to date action being a possible bearish halfway hesitation. And it also opens the way to look at the recent action as potential for a possible bear flag action, pattern the market had recently fallen in love with. A potential target X1 for such a pattern would be in the 475.5 area. Overhead we're in fairly free territory with only the declining short moving average currently at 507.70, plus congestion at 500.99, 505.73 and 510.87, and then the lesser Fibonacci levels at 520.27 and 525.67. US dollar against the Mexican peso. Bearish harami yesterday, but this looks more like a stabilization exercise over the now flatlining long moving average currently at 20.3775 and capped by the 2021 50% Fibonacci line at 20.5849. If not intraday, then on an interday basis. However, the recent action may be, just maybe, a halt to, however temporary, to the very recent run-up prompted by the key reversal up seen 2 Fridays ago. It also brings to mind whether the action since October last year to date may be, just maybe, a very large even eve type double bottom. Now further below the long moving average we have support from the flatlining medium moving average currently at 20.2369, whilst overhead we have the lesser Fibonacci levels at 20.6062, 20.8316 and 20.9039. Now so far today the market is looking to try higher again over the 50% Fibonacci line and testing the lesser Fibonacci line at 20.6062. What looks like an immediate countering bullish opening white Maribosa right now. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.